What if I told you that financial awareness isn't just about understanding numbers, but about mastering the digital environment that affects your spending? In 2026, financial awareness goes beyond basic math skills. It's about seeing through the digital veil created by AI-driven marketing, one-tap biometrics, and invisible fees. With these innovations, your money is often spent without you even realizing it. But what if you could pierce that veil and regain control over your finances? In this video, I'll share the top 5 habits that will sharpen your financial awareness and help you take charge of your spending. Stay tuned to the end for a quick challenge that will improve your financial habits in just a week. 1. The Net Liquid Daily Dashboard. In 2026, with so many automatic transactions happening daily, it's easy to get caught up in the illusion of having more money than you really do. Digital payment systems and apps are designed to make life easier, but they also make it harder to keep track of what's actually in your account. The concept of the Net Liquid Daily Dashboard addresses this problem head-on. By focusing on your available to zero number, you're not just tracking your bank balance, you're ensuring that you understand the true state of your finances, accounting for all of your future obligations. Why does this matter? It's simple. The digital world is full of delayed charges that often don't show up in your balance immediately. Subscriptions, pending credit card charges, and BNPL payments can trick you into thinking you have more money to spend. For instance, if you're expecting an upcoming subscription fee to be deducted from your account, but forget about it, you might end up overspending, only to realize too late that you've been living on borrowed time. Think of it like driving with a blurry speedometer. It's easy to get complacent and feel like you're in control. But if you're available to zero, number represents the most accurate snapshot of your financial reality. It acts as a way to steer you in the right direction. Instead of acting on impulse when your balance feels good, you can make more informed decisions, allowing you to avoid the trap of overspending. Tracking your available to zero number also gives you the foresight to plan better. If you know that you have a large expense coming up, you can adjust your spending habits ahead of time. This helps you avoid that sinking feeling when an unexpected charge arrives, and it ensures that you're always ready to tackle your financial obligations. Regularly reviewing this number will help you stay proactive rather than reactive, preventing financial stress, and ensuring you're always prepared for future. 2. The convenience tax percentage check. With digital convenience becoming the norm, we've all fallen victim to convenience leakage. Those extra fees that come with things like food delivery, ride sharing, or impulse purchases. But here's the thing. When you see that $15 meal turn into a $28 expense because of added fees, you're probably not seeing the full picture of how much that convenience is really costing you. The truth is, you're not just paying for the meal itself. You're paying a huge markup for convenience. This is where the convenience tax percentage check comes in. Every time you make a convenience-based purchase, calculate the additional fees and tips as a percentage of the base price. For example, if a $15 meal turns into $28 after fees, you're paying an 86% markup. Seeing the percentage, rather than just a total price, puts into perspective how much you're actually paying for convenience. Once you start doing this, it becomes much harder to ignore the true cost of convenience purchases. By applying this habit, you'll become more mindful of the hidden costs that add up over time. This habit can help you understand exactly how much you're overpaying for the convenience factor and make you more selective about when you're willing to pay extra. Over time, this awareness will help you identify areas where you can cut back on these unnecessary costs, ultimately saving you money and boosting your financial awareness. Moreover, the habit of regularly calculating the convenience tax percentage can lead to smarter financial decision-making and encourage more thoughtful purchases. With this simple step, you'll be more in control of your spending and better equipped to keep your finances in check. 3. Implement manual friction for large purchases. In the fast-paced digital world of 2026, we become so accustomed to one-tap payments and face recognition for transactions that spending has become too effortless. In fact, this ease of payment has made it easier for people to make impulsive purchases without fully considering the financial consequences. But what if I told you that introducing manual friction into your buying process could dramatically improve your financial decision-making? For any purchase over $100, consider disabling Face ID or removing saved payment methods from your devices. Instead, Force yourself to manually enter your 16-digit credit card number before completing the transaction. This 30-second delay may seem minor, but it plays a significant psychological role in your spending habits. When you pause for a moment and consider the trade-off between your money and the item you're about to buy, you introduce a small but important pain of paying that can help break the impulse buying loop. By reintroducing this friction, you give your brain a chance to fully process the financial commitment you're making. You'll have a moment to ask yourself, is this purchase really worth it? Often, this small pause is enough to disrupt the impulse, causing you to reconsider or even cancel the transaction. Over time, this habit will lead to smarter, more thoughtful spending and prevent you from buying things you don't truly need. Additionally, this pause can help you align your spending with your financial goals, encouraging more intentional purchases that serve your long-term wealth-building plans rather than short-term gratification. For the unit of labor price conversion, when you're making a purchase, it's easy to think of the price as just a number on the screen. But what if you could put that number into context by converting it into hours of work? Before clicking buy, try dividing the price of the item by your net hourly wage. This practice, known as the unit of labor price conversion, helps you put tangible value on the cost of the item, turning it from an abstract number into a real trade-off of your time. For example, if a new gadget costs $300 and your net hourly wage is $20, that gadget costs you 15 hours of actual desk time. This shift in perspective forces you to consider whether that item is truly worth a full day and a quarter of your life. Is it worth the time you would spend earning that money? This practice doesn't just help you think about the financial cost. It also forces you to think about your time as a finite resource. By adopting this habit, you'll be able to make more conscious purchasing decisions. It will help you evaluate whether the item you're about to buy aligns with your long-term goals and whether it's truly worth trading your time for it. Over time, this habit will help you shift your mindset from short-term gratification to long-term financial well-being. 5. The post-purchase emotion log. How often do you regret a purchase? Whether it's an impulse buy or a last-minute decision, we've all experienced buyer's remorse at some point. The key to overcoming this is to track your emotions after a purchase, and that's where the post-purchase emotion log comes in. Once a week, take some time to review your non-essential transactions and label them as satisfied, regretful, or neutral. This simple practice helps you reflect on your purchases and identify patterns in your spending habits. Are you more likely to feel regret after purchasing something on sale? Do impulse buys leave you feeling neutral rather than satisfied? Tracking your emotions can reveal which spending habits actually bring you lasting value, and which ones are just a result of a temporary dopamine hit triggered by marketing or AI notifications. Over time, the post-purchase emotion log will help you develop a clearer understanding of your financial habits. You'll become more attuned to your motivations for making purchases and be able to differentiate between true needs and fleeting desires. This habit will not only improve your financial awareness, but also help you make smarter, more intentional purchases in the future. There you have it, the top 5 smart habits to improve your financial awareness in 2026. From tracking your available to zero balance to reintroducing friction for large purchases, these habits will give you a clearer view of where your money is going and help you make better financial decisions. If you found this video valuable, don't forget to like, share, and subscribe for more tips on improving your financial awareness. Let me know in the comments which habit you're going to try first, and I'll see you in the next video.